This is the Bitcoin Made Simple podcast. Here's your host, Corey Tusick.
Hey everybody, thanks for tuning in. On today's episode, I talked to Dylan LeClair. This is the second iteration of Dylan coming on the show and giving some on-chain analytics. So if you haven't followed Dylan yet, but that's not many of you because he's got like 50,000 followers at this point. But he's at Dylan LeClair _ on Twitter. I don't know. We'll do this kind of semi-regularly to see if I love talking to him and getting his insights, and he's brilliant. So the knowledge he brings is great, helps give you a feel for what's going on in the market, and where the momentum is heading as we all want the number to go up. Speaking of which, I'll put a Twitter poll out on this, but it's either super cringy, the name I came up with, but since it's the second iteration, I said we should title it. And I threw it out there to him, and there you'll hear it. But I'll put a poll out to say what maybe the title should be, and if not, if it's what I came up with is super cringy because I'm like an old man now, then let me know. But the sponsor for today is Coinbeast Connect. Do you have questions about Bitcoin? Personalize your learning and book a one-on-one video call with a Bitcoin pro on Coinbeast Connect. Learn about mining, security, the Lightning Network, DeFi, taxes, and many other topics. It's really easy. Choose your topic and pro, select a date when you're available, and bring your questions to the meeting room. Book your first call today by going to coinbeast.com and clicking on the Connect tab. Be prepared for the financial revolution and get the knowledge you need. If you want to get in touch with me, Twitter handle is at Bitcoin Simply. My personal one is at Tusick Corey. And you can email the show, Bitcoin Made Simple Podcast at gmail.com. Thanks. So first topic of business, and this might make me sound like a boomer compared to you. Because my wife was like, you're like a dinosaur compared to this kid. Like, she's like, you gotta realize, like, when you come up with ideas or something. So if this is like, if we do this, like multiple times, like more than once now, it should have a name for the segment. How lame is the name Number Go Where with Dylan LeClair? Is that like the cringiest, lamest thing ever?
I mean, there's been worse things.
I'll take it as that's their polite way of saying that is brutal.
I made it sketchy, I guess.
Yeah, maybe we'll leave it up to the audience and stuff. I told my wife, I said, what if we call it, you could call it, because each episode I have, labeled like BMS and then the number of the episode. So it's like to stand out so people see, market update or whatever. Like, oh, maybe Number Go Where with Dylan LeClair. And she was like, yeah. I don't know. So I was like, oh, we'll put it out there, see what people think. It might be self-owning. All right. Now my second question, not Bitcoin related, is, we talked about hockey last time. Are you related to John LeClair?
No, but I get it a lot from the same state. So when I played, youth sports growing up and stuff and had the name on the back of the jersey, everyone was like, oh my God. Yeah. And, but no, I'm not. I'm from 30 minutes from where he was, he played high school and whatnot. So, but I'm not related.
Okay. Thank God, because just a quick anecdote was the Flyers were playing the Penguins in the playoffs. And I went to the playoff game, and I was a big shit talker while playing hockey. I don't know what it is, get inside the boards and my mouth just would go. And I made a sign that said, vote for LeClair, #1 overrated, and went down during warmups and pressed it against the glass. And he saw it when they came out, and he shook his head. He shot the puck off the glass at me. And then we went over to where they go into the runway, and we held it there, and he punched it on the way out. And so it was this funny inside family thing. And then I'm sitting there after we talked last time, and I was like, oh crap. I was like, where's John LeClair from? And I looked it up, and he's from Vermont. And I was like, oh my God. I was like, could you imagine if this was his dad or uncle or something?
I mean, maybe some third, fourth cousin or something. Small world over here.
I know. I was just real worried. I was like, this guy, I legitimately harassed him during a sporting event when I was 13 or 14 years old, and now come back to bite me. All right. So anyways, so I saw your article about the Golden Cross and what we're coming up on. I mean, what are you seeing in the market currently? Like, what are the trends? You know, the number, we're what, at 47, 48 right now. So where do you see
Yeah,
us
I
going?
mean, so the Golden Cross, I mean, to be honest, it's more of like a trading indicator, and it's a lagging indicator. So Golden Cross is 50-day moving average, breaks to the upside, passes the 200-day moving average. So it's lagging, right? But it basically just kind of shows momentum in the market. And so like we've seen it a couple times. And the last time we saw it was like the last two times were, I think, like what was it? It was, sometime last summer, summer 2020. And then before that, it was like February of 2020. And, we obviously had a huge crash. So there's other variables, right? Like the crash of 2020, that March crash was like a macro kind of, liquidity crunch. But, it really just kind of shows that with that Golden Cross, we bounced really, really hard off 30,000 from a couple months ago. And basically what's driving the market right now is just spot supply dynamics. There's just a big supply squeeze, and so it's just, balances on exchanges are at year to date lows, honestly, like three-year lows, long-term holder supplies at all-time highs. You're just seeing this really massive accumulation, honestly, since the middle of 2021, and this accumulation has occurred through all of the volatility, and it's just kind of been relentless. So we're seeing, the day that El Salvador legal tender was officially passed, right? There was a huge like crash from 52 to 44 or whatever it was, right? But that sort of stuff's like derivative driven, and there will be dislocations like that to the upside and the downside. That's just how the free market works. But what we're seeing now is just more of the same. I mean, I've sounded like a broken record talking about the market the last few months, but like it's just supply crunch. There's just a lot of accumulation, and eventually we will snap to the upside, and we've been kind of doing that for the last 2 months, and in more of a like a kind of a grind up.
So and like you were saying before about like you guys use the analogy of like keeping a beach ball underwater, which I think is so
Yeah.
good. At this point, so this basically you're seeing a bunch of spot buying, and the amount of Bitcoin available for sale is just diminishing on exchanges. Is that what, the layman's terms, like as simple as possible? It's like there's 100 people want lemonade and there's only 10 glasses.
Yeah, I mean, more or less. There's I think right now, just looking at the on-chain stuff, and like especially when you're looking at like balance on like something like Coinbase, big institutional US money is there. You'll just kind of see like lockstep movements downwards and the exchange bounces. It's not like, I mean, retail matters, right? And, every $10 buy, every Satoshi you take off the market and put into cold storage does matter. But what really is driving the market right now is big money. And I think just looking at like on-chain activity, you can see like retail really still isn't in this market. Like the mempool is essentially empty right now. There's not many transactions occurring. You can send Bitcoin for, almost no cost right now, which shows me, and some of the people like on chain are talking about this, that like retail isn't here, because during like retail bull markets you'll see pretty big spikes in on-chain activity and fees, and everybody's trying to transact, and we're not really seeing that right now. What we're seeing is really, I think, an institutional buy and hold, and so you kind of see that with whale movements and all of that. But I think probably from the 30K level, you see a lot of those guys, like Dalio said yesterday. Like, I mean, he prefaced it with governments could kill it if it gets too successful. But Dalio's like, I own some Bitcoin, right? And like that's another one of those things that's like Paul Tudor Jones last May. It's like a day before the halving. He's like, yeah, Bitcoin, great monetary inflation, own some. Like that was a huge line in the sand for like these macro guys. Like, oh wait, this thing's not just this speculative, mania. Like I need some. And so I think that's kind of what we're seeing happen today, is a lot of these macro guys that like we're really interested at 60K. We're really interested in 2021. This inflation narrative, money printer, go burr, all this stuff. Like, looking at Fed balance sheets, like where do I go? How do I position myself? Bonds are giving me nothing. They're starting to dabble in Bitcoin, and that's 1%, 2%, 3%, 5%. Some of it's GBTC, but more and more increasingly so, like, these guys want Bitcoin exposure. And so I think that's what we're starting to see. And I think that's really gonna, we're going to see the institutional announcements that, hey, I bought Bitcoin at 34,000 once we like kind of get around that all-time high. They don't want to talk their book now, but once it's 2x, then they'll announce it, and they'll announce it proudly.
Okay. So basically that's what you're seeing then is like large chunks of Bitcoin being taken off of exchanges, but you said it's not retail driven. And is the mempool an indicator for like the basically how many orders, for people that don't know what that is? I mean, mempool was just the amount of transactions happening in a block, right? And like waiting to happen.
The mempool is just like the queue to get in to get your transaction confirmed on the blockchain. So there's a limited amount of space in every block that that happens about every 10 minutes. And so there's basically a market for getting your transaction into the next block. And so when there's a lot, when there's a lot of transactions that are fighting or competing to get in this next block, there's a competitive fee market. And right now you can essentially send Bitcoin for the cheapest amount, the lowest amount of fees possible. And you might get confirmed, you might get in that next block right away. And so that's just saying, that's showing me that basically the demand and part of it is some big exchanges implemented SegWit over the past couple of months. So SegWit was a soft fork that occurred in 2017 that essentially just made Bitcoin more scalable. It was essentially a block size increase because it made every transaction smaller in size, just less data. So that was a scaling solution. So that has something to do with the mempool. Another thing is following the kind of the China hash rate exodus. There was a bunch of machines migrated, difficulty adjusted lower, I think 4 straight times. And so we're kind of seeing that hash rate bounce back. And so when hash rate is outpacing difficulty, when hash rate, when difficulty is expected to move to adjust upwards, meaning blocks are coming in faster than 10 minutes, that also will have an effect on kind of making the mempool a lot like smaller, right? Transactions are confirming a lot faster, or marginally faster than that 10-minute interval. And so that's an effect, but more or less it's basically a ghost town. And so for the most part, we're just Bitcoiners in general are just stacking and hodling, as well as the Lightning Network. I think that has a marginal effect on the mempool, but not too significant as of now.
Okay. So but that is you'd say that's an indicator to see that retail has arrived. Like if you start to see it fill up, and with the Taproot, it might not be the same, might not be the same volume as before, but once we see that return, that might be the showing like, oh, okay, now FOMO's kicking in, right?
Yeah, I think that's definitely something to look out for. I mean, there's definitely a large percentage of retail that'll come in and just buy on Coinbase or buy on exchange and not ever transact on chain. But there is a reality that as new users come in, some will transact on the network. As more countries adopt Bitcoin, El Salvador, a very small country, like 6 million people, they're also building out Lightning infrastructure, but demand for block space is going to increase. And these big institutional buyers, like just for instance, like MicroStrategy, like Michael Saylor, when he buys 5,000 Bitcoin, I mean, I don't think he just straight up sends it in one batch, but they'll batch a transaction and send 50 UTXOs, and then they never move again ever, right? So that I mean, and hodling is using, make no mistake, but that's not something that you'll see on the mempool. Like Paul Tudor Jones and Ray Dalio aren't transacting on the Bitcoin network every single day, more as someone that adopts Bitcoin as as their actual money, right? And so that's occurring more and more globally, and we saw that really pick up at the peak of 2017, where fees were like 30% of the block reward for miners, and right now they're like fees are like 1% of the block reward. So basically all miner revenue right now is from the block subsidy, from that issuance schedule where they're getting 6.25 Bitcoin every block. But that's something I'm just monitoring, but one of many things.
Okay, and what are some of the other things you pay attention to? What are some of the other big indicators that you look at?
Yeah, so I mean, I like to look at obviously the supply dynamics where it's like exchange balance, the liquid supply, and like long-term holders. So we've seen that just kind of basically long-term holders supply, which is 155-day threshold of not having moved, and that's Glassnode shows that there's like a statistical reason. Basically, the longer UTXO is held, the less probability that it's moved in the future. And there's like a statistical relationship there. And so at 155 days, it's kind of crosses this threshold of being very unlikely to be spent soon. So they qualify. That's the long-term holder threshold. But regardless, we've seen that just basically go vertical. And so 155 days from now is like, I think it's like April 15th, which is literally the top. And so you've seen this massive amount of Bitcoiners, of hodlers, stackers that are continuing to accumulate regardless of a 60% pullback, and it's just up and to the right. And so that's one of the things that I'm definitely paying attention to. The liquid supply, it's measured a little bit different, but it's kind of the same thing. It's when you have an address or an entity rather, so clusters of addresses that can be identified as being held by the same holder or the same individual, the same entity, and that's kind of done using like data heuristics and all of this. But when they haven't spent any out of a wallet, it's classified as illiquid. And so when they have spent out of an entity has moved some of their coins, there's liquid and then there's highly liquid. But what we're seeing, like overall trend throughout the history of Bitcoin, is that a liquid supply is up and to the right, and especially since March of 2020, it's kind of hockey sticked up a little bit. And so that's one of the kind of the major shifts that continues, is that there's just kind of this relentless accumulation occurring, and there's so many different ways to measure it, but those are a couple more. Another one I really like to look at is realized price. So when you have the Bitcoin price, or if you're talking about market cap, you have all of the coins, 18.8 million times the price of Bitcoin. So the market cap is like, off the top of my head, is like 900 billion, right? And so, but what realized price or realized market cap is it takes the price of every coin when it was last moved. So for instance, Satoshi's coins are worth 0 in this calculation because they were acquired at 0. And so the price of Bitcoin is 48,000, but the realized price is like 21,000. And you see this, and when coins start changing hands, especially when old coins are being spent, you see this move up in a big way. And so we saw, and it's basically like, I wouldn't call it, fair value, because for the most part, there's very few times where price is under realized price throughout the history of Bitcoin. And those have been like basically generational buying opportunities. But for the most part, realized price is almost like this like kind of floor for Bitcoin. It's like, 21,000, that's the average price. Essentially, you can think of it as like the average price paid for Bitcoin for everyone on the network. And it's basically the average wallet price when it was last moved. And so I like to watch the relationship between price and realized price, because what you see, especially during these bull markets, is price gets bid massively at the margin where there's no one selling Bitcoin, right? There's the supply squeeze. And that can be, because of new demand or because this halving cuts the issuance, and price gets bid like crazy. But realized price lags. And so you see like the ratio between the two, it kind of explode, it like blows out. And so market value to realized value, like that, there's a metric for it. It kind of, you can see like every single bubble throughout the history of Bitcoin. It's like the ratio between the market price versus the realized price explodes. And so I like just to kind of watch what realized price is doing, because when it's ticking up, while the price is consolidating, like it did the last, when I was, the realized price was ticking up actually, while price was at like 30K. And so things like that are actually very encouraging. Because it kind of shows that the floor, the average price paid per coin, it's not just a few derivative traders or one or two players in the market that are bidding up the spot price, and no one's actually, like the average price paid per coin isn't moving. And so I like looking at realized price just because it kind of gives me a feel of if the market's really overheated or not, and everything kind of shows me now that we're in a bull market, but it's like still the early phases of it, or at least not the final stages of this bull market.
Okay, so yeah, so as the realized price goes up, that's basically kind of setting the floor, like the ultimate floor. that, we're not going to get to? Has it ever gone down below the realized price?
It has. So it did. It did in in the last kind of legs of the bear market in 2018, 2019. Realized price kind of stayed around 4,000. It was basically flat. Like it was 3,000 at the top of 2017 when price was 20K, and then it kind of oscillated between 3 and 4,000 for like the next year or two as coins essentially traded hands. And people sold at a loss, and some people sold at a big gain. And then when there was kind of that 6K for a while, and there was a huge capitulation down to 3,000. That it briefly dipped below realized price, and then there was a kind of consolidation at 3,000, and it went. And at the summer of 2019, we went back up to 12, and it kind of bounced around this range until the late months of 2020 when we broke out and made that run towards all-time highs. And that's when you saw just realized price hockey stick up. And coins essentially there was a bunch of new money coming in, and that new money was met with a bunch of old holders, essentially not cashing out, but coins were just trading hands. So realized price, there's the biggest influx of capital. Essentially, you can think of it like that: the biggest influx of capital ever into this market. And so now realized price is at 21K, and it's slowly every single day it's ticking up, 50, 100, 150 bucks. But I think, coming, especially once you break this all-time high, you're going to see some people take profits, but you're going to see this massive influx of capital. And that's when I think realized price starts to chug up in a big way.
Okay. So realized price might be the thing. It chugs up first and then pushes the spot price up higher.
Well, yeah. So like spot price, like realized price can move upwards even if spot is consolidating if old holders are cashing out. But what will really make realized price kind of hockey stick up, and it's kind of this floor, but it is possible to go under. But for the most part, when you're thinking of realized price, it's like the average price paid per coin on the network, and so it doesn't go under that for a sustained period of time, usually throughout the history of Bitcoin. But I expect once the spot kind of gets bid up on the margin, you'll see realized price start to tick up, but it really ticks up when a bunch of coins trade hands. And so is that the top or near the top? That's to be seen. But that kind of means when realized price is exploding upwards, it means a lot of coins are trading hands, and you can think of that as like a sell or an economic kind of sell. It doesn't have to be sending it to an exchange, but I could, buy a house with my Bitcoin or something, and someone else is, taking that value in. And so, yeah, that's just another one of the kind of the metrics I look at. I like to look at the relationship between the two, because if the ratio between market price to realized price blows out, that's basically kind of somewhat of a cop signal. And again, like I'm not buying or selling in and out of this. Like my core position is to hodl. But I'm not leveraging the farm. If the realized price is 30K and the Bitcoin price is 200K, because that means that essentially it's a lot, the price is bid up at the margin and there's a lot of room for downside.
Yeah, that makes me think, like when I talked to Preston Pish about the price and where like we would see it come down on like the stock to flow in relation to stock to flow, we were like, and he was like, it might, if it shoots up to 250, 300, but like I wouldn't be surprised if it comes down to like 60 and then bounces back up to 100. You know what I mean? Like it's just, it's gonna, that's why you hodl. But to me, and the more I think about that, I'm like, I don't think we're gonna know hyper Bitcoinization happened until a little bit after, not way after. Like we'll know, but like we're not gonna be sitting there going like, this is it, this is the moment, it's hyper Bitcoinization, everybody. It's gonna be like a wild 6 months, and then we're gonna go, holy crap, we're there. Like, what do you think about that?
Yeah, I think that's kind of occurring like today, where there's big announcements are just kind of normalized, where it's like, oh, like Laos, I might not be saying that right. Like Laos is, communist nation in Southern Asia. They're mining Bitcoin. Their government's mining Bitcoin with excess hydro. Like, yep, just another nation state. Where like that's huge, right? El Salvador, like tiny country, whatever. But Bitcoin's essentially it's a global tax haven. Like, and so what happens to the GDP over the next 3-4 years? Like, I don't know, but I expect it to go up a lot. It's kind of this welcome sign for entrepreneurs, like, come build here, run your digital business here, right? Like, and pay no taxes with this pristine asset. Capital can flow seamlessly into this nation. And so things like that are just like, a public company is like, hey, we're on a Bitcoin standard. Like a year ago, or, they announced it last August. So 13, 14 months ago, I would have been like, there's no way, a nation state adopts Bitcoin as legal tender and a corporation is borrowing billions of dollars and saying our strategy is to sell software and to hodl Bitcoin. Like, things like that are like, the Overton window is like shifting like a lot. And so I think one of the things that, like, for hyper Bitcoinization is that I think hash rate, and we're seeing, a big global supply chain kind of disruption because of COVID and a bunch of other things, but hash rate has to, 100x, like, maybe that's an exaggeration over the short term, but Bitcoin, if you think of it as like a commodity, Saylor's said a lot about digital energy, and I somewhat agree, right? Like, money is just a communication mechanism of value, but hash rate, if Bitcoin explodes, and it's going to be extremely lucrative for miners, even like it is today, but there's going to be a big lag. But hash rate, ultimately, like, Bitcoin is a commodity, and so hash rate's going to have to ratchet up. There's a huge economic incentive for it to probably go 100x over the next 5-10 years, as there's this huge incentive to sell wasted energy resources. And so that's one of the things of, like, hyper Bitcoinization to me. It's like, number go up, but what's actually happening is now we have this basically standardized unit of value in the form of a Satoshi, that's directly one-to-one correlated with our energy production, right? And so I think that's one of the most exciting things for me with Bitcoin is, like, now we have, like, humanity's productivity and standard of living is like a derivative of our energy production and consumption, right? And so with Bitcoin, like, there's now this one-to-one relationship that the rest of the world hasn't figured out yet. That's where the opportunity lies. But I think hyper Bitcoinization, one of the things is that hash rate and Bitcoin mining in general is going to touch so many industries and so many different things that we can't even fathom, and that's really exciting.
Yeah, that's awesome. Well, a couple last questions. So we talked about the Golden Cross, but I've heard people talk about the Death Cross before. So is the Golden Cross whenever you're going up, and the Death Cross is whenever the 50-day moving average goes below the 200-day?
Yeah. And these are just momentum. And like, so the 50-day moving average, 200-day moving average, these are just kind of like trading signals for, like, kind of, I mean, people use them in crypto or Bitcoin, but it's more like a legacy thing. Like, is this asset, what's the trend? What's the momentum looking like? And so the Death Cross, we saw that back in, I think, early May. And, there was more downside, but it's a lagging indicator. So, I think, and especially with the Golden Cross, when you're thinking about Bitcoin and how the supply and demand dynamics work, like, it's one of the most reflexive assets we've ever seen, right? So, like, during a bull market, no one sells, and you've had massive accumulation since probably an 80% downturn, or at some point a 50% downturn over the last couple of years. These people are convicted and they're not selling, and they know what they hold. And so you have a bunch of new money flood in, and they are having to, compete they're having to fight for a tiny amount of supply. And so when you're looking at a Golden Cross, it's basically saying, like, it's basically showing the momentum is ticking up, and we're going to see some, reflexive, exciting price action over the next, couple months or year or whatever it is. And that's not a sure thing. But in general, the chart, the Bitcoin price is the biggest signal for what's unfolding here. And once we break all-time highs, I expect the mania to fully kick in.
So you're sitting there, you're rubbing your hands, you're ready for to just go to parabolic levels. That's why I feel like it kind of feels like it's basically like a rubber band that's just getting stretched and stretched and stretched. and then, or like the opposite would be like a spring, maybe just coiling, getting pressed down, and like, they're like, more institutions are like, hey, get over here, get on this spring so it doesn't explode yet, because once they announce, I mean, it's going to be gone, like it's going through the roof. So I'm not surprised we haven't heard.
Who in the right mind is going to sell at 70,000, right? There's a lot of liquidity right now. There's bids that are been left open, or limit orders, and all this stuff, right? Like we chopped around 50, 60K for like 3 months. So there's going to be a little bit of resistance there, just from like a technical lens. And again, like I'm not looking at these charts and buying here and selling here, right? Like I'm just stacking through it all. And depending on pullbacks, or if I see an opportunity, like I'll leverage up a little bit, or maybe speculate in some Bitcoin derivative, like a minor micro strategy, or maybe some call options. But for the most part, it's like just buy and hold spot, send it to your cold storage, and wait for the fireworks, because we're going to break all-time highs in 2021. I'm extremely confident in that. And whatever that time frame is after, like it's going to get wild, because everybody's eyes are going to be on this thing, and it's going to be hot air above 64K. It's Bitcoin in price discovery mode is a fun time.
So you're saying, do you think we'll see 100K in 2021? And again, this is not financial advice. Nobody's predicting anything. Just curious what your thoughts are.
I am holding 100K call options, which I bought at 30K, and so those are pretty good in the money. I might sell them early, but I guess it really depends on the next month or two here. Again, like Bitcoin trades unlike any other asset, where like sitting at 49K and we've been chopping around, and like 100K in 3 months. That sounds crazy, but like it's not, because of how Bitcoin trades. Like we were at, I don't even know when the all-time high broke in 2020, but like we opened the year at 29,000, and Christmas it was like 24,000, and then we were at 40K in like 30 days, right? Like it's just madness. And so I fully expect that to happen again. And just with the way this thing trades, and with, again, like I think the announcements, and some of my kind of people I talk to in the industry, I haven't gotten direct, inside information here, but they're telling me like there's some big money that was buying at 30, 35, 40, and like it's going to get wild. And so, these are people I trust, and not that I'm blindly trusting anything, but I definitely put some weight into what they say. These guys are talking with the biggest guys in the space, and guys with big pockets. So I fully expect that to come, and the price action with it is going to be exciting.
Awesome. And just the last thing, I saw your tweet about separating Bitcoin from crypto. And I like that sentiment, because the last two people I interviewed was Ben Mesrick, and then I haven't released this one yet, but it's Jack Posobiec. He's like a conservative commentator, but he with like China intelligence, all that kind of stuff. So I just they mention crypto because they're not Bitcoin, but big in Bitcoin. So I just wanted to get that out there, that I really support that, and I hope we get to see more of that. But thanks for coming on, man. I really appreciate it. Let's I look forward to doing this again, and just let people know where they can check you out.
Yeah, my name is Dylan LeClair. Thanks for having me on. It was fun as always. For the most part, I'm hanging out on Twitter. You can find me at Dylan LeClair _ I work at Bitcoin Magazine. I do their markets, their premium market product. So cover like on-chain analytics, global macro, and derivative stuff. Just kind of putting the big picture together. We publish a daily newsletter, so like 20 pieces of content a month, and a pretty in-depth, like 30-page monthly report at the end of every month. So check that out. Just go to Bitcoin Magazine. You'll see it, kind of one of their top bars. It is paid, but if you want to check it out, you can use code BITS, BITS, and get like a free trial. I'm not sure if it's a month or longer than that, but or just hit me up over DMs if you want to check it out. It's kind of a lot of the stuff we talked about today, but we go more in depth, and it's visual, so you'll have the charts in front of you, which are helpful.
Yeah, and I'd say worth every penny. So, all right, man, Dylan, we'll talk again soon. Thanks, man.
Thanks, Barry. Appreciate it, man.